Gold has finally broken out above $2,500 an ounce. Where is it going to go from here? Let's get into it. Buy your gold and silver online from SD Bullion. New customers get gold or silver at spot by visiting sdbullion.com/new. Thank you so much for watching. I do sincerely appreciate it. If you want to learn more about investing in precious metals, or if you just want to watch awesome videos about gold and silver, make sure to subscribe to my YouTube channel. All right, so take a look at gold, currently sitting at $2,518 an ounce. This is a massive move for gold. Yesterday it went up almost $60, over a 2.3% increase in price. Now this is a huge move, not only because it breaks the psychological $2,500 barrier, but also it broke through it with ease. There was not much resistance, and gold continued to surge higher as the day moved on. I mean, take a look at this chart. Yesterday, there was a little bit of volatility around 10 o'clock in the morning. Obviously, with computer trading, anytime you get to these different levels, you're going to see some of that. But once gold broke that $2,500 mark, it just continued to rise, nothing standing in its way. Silver also has been crushing it. It ended the week at $29.20 an ounce. On Friday, it moved up 70 cents. Actually, a similar move to gold. It moved slightly faster than gold, but not by much. Let's take a look at the gold-silver ratio. You can see it's currently sitting right around 86. It did drop on Friday, but honestly, this move for gold was probably one of the biggest moves we've seen in a long time. Usually when both gold and silver are moving up together, silver will move much faster than gold, but that was not the case on Friday. So now we come to the question, why were the metals moving up to begin with? The first thing I want to point out is that the dollar has been trending lower, and as the dollar moves down, this makes things like gold and silver look much more attractive, especially to foreign investors. So the dollar has been moving down because of all of the economic data that came out last week. If we take a look at the weekly gold survey over at Kitco Metals, you could see that the majority of both Main Street and Wall Street are bullish on gold next week. They think the price is going to continue to rise, and they do lay out day by day what could affect gold and silver price next week. So starting off, the Fed's Darren Waller will speak Monday morning, with Bostic and Barr chiming in during the day on Tuesday. Now we know anytime someone from the Fed speaks, this could have a huge effect on what the Fed is going to do at the next meeting. All eyes are on that. We'll get to that in a second. But Wednesday morning, we'll see MBA mortgage applications for the week ending August 16th, along with the release of the FOMC minutes from the July meeting. I'm not expecting Wednesday to be a huge day for metals. However, Thursday morning, markets will receive initial jobless claims and the S&P Global Manufacturing and Services PMIs for August, along with U.S. existing home sales for July. This is a lot of economic data coming out in one day. I think we could see Thursday be a big day for gold and silver, just like we saw last week. And on Friday, markets will receive more housing data with the U.S. new home sales report for July. But here is the thing we're all waiting for next week. It's going to be Friday, 10 a.m. Eastern, when Federal Reserve Chair Jerome Powell delivers his speech from the central bank's Jackson Hole Symposium. Markets will be paying close attention to Powell's choice of words as they look for confirmation of a September rate cut and possible indications that the cut could be even larger than the 25 basis points already fully priced in. This is a huge deal, and I know a lot of us are going to be watching Powell's speech on Friday morning, listening very closely to what he says, because if he confirms a 25 basis point rate cut in September or hints at the possibility of a larger rate cut, then we could see both gold and silver take off. Now, the target rate probabilities for the upcoming September meeting have shifted since I last showed them. Last time we looked at them, it was about a 50-50% chance of a 25 basis point rate cut and a 50 basis point rate cut. Now, CME Group is predicting about a 75% chance that rates will only come down by 25 basis points, a 25% chance that rates will come down by 50 basis points. And this is what the markets have already priced in, as we just read. So with gold at $2,500, they're essentially predicting rates are only going to come down by 25 basis points. So again, if we see a larger rate cut, this could really push gold much higher than it is right now. In addition to that, Adam Button, head of currency strategy at ForexLive.com, thinks investors should be looking to buy the breakout. He said that Friday's strength may have been boosted by the news that Chinese banks were issuing higher quotas to buy more gold. And we know that central bank demand for gold can have a huge effect on gold price. Check out this quote from a Market Watch article. Central bank demand gold has surged in the past 5 years, swallowing nearly 1 in every 10 ounces produced by the mining sector on official data. So 10% of all the gold that's being mined is actually being bought up by central banks. Why are they buying so much gold? Because they don't trust the fiat currencies. If you're a bank and you can hold either your country's fiat currency or you can hold gold, then by holding gold, you're actually telling the public, I don't trust my currency. I think gold is going to perform better. Button said he thought that the close above $2,500 would be very important. He also said it wasn't long ago that predicting $2,500 gold made you sound like a delusional gold bug. He added, and here we are. He also noted that the new all-time high came with very little fanfare, even though gold is outperforming equities and the rest of the commodity complex. It would be different if stocks weren't making new highs and AI didn't have all this attention, he said. I would be less bullish on gold if it was on the front page of CNBC every day. Yeah, that's the thing. Gold is literally crushing it. It's higher than it has ever been before, and mainstream media is not covering it. They're not talking about it. It's almost like it's silently setting new highs and no one is paying attention. Button said he thinks the yellow metal still has a long way to go because it's breached $2,500 before the first Fed rate cut. But let's talk about next week. Typically, when we see a massive surge to end the week on Friday, I always expect a pullback or a correction on Monday. Is that going to happen? I don't know, but that's what I expect. So after Monday, it looks like nothing crazy is happening until Thursday and then especially Friday. So I think we're going to see some fireworks later in the week next week. So stay tuned for that. And if we do get a dip at some point in either gold or silver next week, I say take advantage of that dip because we do not know how long this is going to last. And based on what Powell says on Friday, this could be the start of another trend where we see silver hit those new highs. It only has to go over 32.50 to be the highest it's been in 11 or 12 years. So that's what's going on with precious metals right now. Let me know what you all think about gold cracking that $2,500 mark down below in the comment section. Thank you so much for watching, and I will see you all in my next one. Silver Dragons out.